Good afternoon, investors. You are now on Kleverstock with me, Ainun Jaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia's benchmark FPM KLCI opened lower today as investors took profits following yesterday's solid performance, while the broader market remained on a firmer footing, tracking positive overnight cues from Wall Street. At 9:10 a.m., the FPM KLCI fell 1.79 points or 0.10% to 1,669.50 from Monday's close of 1,671.29. The index had opened 2.51 points weaker at 1,668.78. The market breadth was positive, with 182 gainers leading 116 losers. A further 301 counters were unchanged, while 2,175 were untraded and 11 suspended. Turnover amounted to 114.92 million shares, valued at 58.71 million ringgit. Rakuten Trade Sdn Bhd Vice President of Equity Research Tong Pak Leng noted that Wall Street ended higher, supported by AI-related trades. Nonetheless, he said the overall sentiment remains cautious as funds are also rotating to cheaper alternatives amid the lofty valuations within the technology sector. Furthermore, funds are de-risking from Wall Street and many are finding their way into Asia, underscored by better fundamentals and valuations. He said the benchmark index has added 30 points over the last 5 trading days, and we believe it is poised to test the 1,700 level amid some intermittent corrections. As such, we expect the index to hover between the 1,665 to 1,680 range today. Now, among the heavyweights, Petronas Dagangan added 12 cents to 19 ringgit and 64 cent. MISC added 1 cent to 7 ringgit and 70 cent. Tenaga Nasional lost 4 cents to 13 ringgit and 50 cent, while both Hong Leong Bank and IHH Healthcare were flat at 22 ringgit and 26 cents and 8 ringgit and 62 cents. On the most active list, Zetrix AI, ICA Integrated and HHRG rose half a cent each to 81 cent, 20 cent and 6.5 cent, respectively. TWL and Compugates were flat at 2.5 cent and 1.5 cent, respectively. Top gainers included Nestle, which increased 80 cent to 115 ringgit and 70 cent. Dutch Lady added 8 cents to 30 ringgit and 18 cent. And Malayan Cement gained 7 cents to 7 ringgit and 30 cents. Kuala Lumpur Kepong and Pentamaster were 6 cents higher at 20 ringgit and 8 cents and 4 ringgit and 1 cent, respectively. Among the top losers, PLD Plantation fell 1 ringgit and 60 cents to 14 ringgit and 20 cent. Petronas Gas lost 14 cents to 17 ringgit and 96 cent. Malaysian Pacific and Negeri Sembilan Oil Palm decreased 12 cents to 32 ringgit and 46 cents and 5 ringgit and 63 cents, while Press Metals slid 7 cents to 7 ringgit and 2 cents. Moving on to our local currency and foreign exchange. The ringgit opened higher against US dollar in early trade today, supported by a weaker greenback as US dollar index DXY declined by 0.33% to 98.271 points amid thin trading conditions during the holiday shortened week. At 8 a.m., the local note strengthened to 4.0650, 4.0765 against US dollar from 4.0770 or 4.0800 at Monday's close. Now, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the softer DXY was largely due to reduced market participation during the festive period, coupled with dovish remarks from US Federal Reserve officials. He noted that recent signals from the Federal Open Market Committee suggested a cautious but accommodative stance, with policymakers remaining divided over the pace and timing of future interest rate adjustments. He said the latest FOMC decision on December 10th saw divided views among members, whereby 2 voted to maintain the benchmark while 1 chose to vote for a 50 basis point cut. He expects lingering demand for the US dollar amid subdued regional trading in the absence of fresh catalysts, with the ringgit likely to continue to oscillate between 4 ringgit and 7 cents and 4 ringgit and 8 cents against the greenback. Now, at the opening, the ringgit edged down against the Japanese yen to 2.5908 or 2.5983, inched down marginally against the British pound to 5.4751 or 5.4906, but improved against the euro to 4.7821 or 4.7956. The local currency appreciated against the Singapore dollar to 3.1556 or 3.1647, rose versus the Thai baht to 13.0560 or 13.1022, firmed against the Indonesian rupiah to 242.2 or 243, and was higher against the Philippine peso at 6.92 or 6.94. Now for some local economic news. Malaysia has approved total investments of 370.5 billion ringgit and exports of 1.5 trillion ringgit in 2024, a 5.7% increase from the previous year, according to the Investment, Trade and Industry Ministry. The ministry noted that the results demonstrate continued global confidence in Malaysia's competitiveness, governance, and long-term economic outlook. They also highlight the country's ongoing efforts to diversify the economy and foster sustainable industrial growth. The ministry has published its Sustainability Report 2024, highlighting its strong commitment to sustainable governance, transparent reporting, and the promotion of Malaysia's national environmental social agenda. Now, in its second edition, the report builds on the groundwork laid in 2023 and offers a more comprehensive, data-driven overview of the ministry's operational performance, institutional milestones, and policy contributions towards a greener, more resilient, and future-ready economy. Within the ministry, several key organizational milestones illustrate its progress in embedding sustainability across its operations. It said the ministry achieved 70% female representation in senior management, underscoring its commitment to inclusive and progressive leadership. The ministry also improved water usage efficiency across its facilities, as demonstrated by an approximately 15% decline in total water consumption compared to the previous year. Now, due to focused waste reduction initiatives and improved operational efficiencies, the ministry cut its waste from 309.45 tons in 2023 to 68.12 tons in 2024, achieving a 78% decrease in total waste generated. The ministry's ongoing publication of the report aligns with the government's broader sustainability agenda. In 2024, the ministries and its agencies launched several key national policy initiatives, including the National Semiconductor Strategy, the Circular Economy Policy Framework, and Green Investment Strategy, and the Decarbonization Pathway for Malaysia's manufacturing sectors. It added, collectively, these initiatives accelerate the nation's transition toward low-carbon industries, enhance resource efficiencies, and lay the groundwork for long-term economic transformation aligned with global sustainability imperatives. Still on local news update. The international reserves of Bank Negara Malaysia (BNM) expanded to 124.3 billion US dollars as at December 15, 2025. The central bank's international reserve stood at $124.1 billion as at November 28, 2025, unchanged from October 31, 2025. BNM said in a statement today that the reserves position is sufficient to finance 4.8 months of imports of goods and services and is 0.9 times the total short-term external debt. It said the main components of the reserves were foreign currency reserves, $109.9 billion, International Monetary Fund reserves position, $1.3 billion, special drawing rights SDRs, $5.9 billion, gold, $4.8 billion, and other reserve assets as much as $2.3 billion. Now, total assets amounted to 610.57 billion ringgit, comprising gold and foreign exchange and other reserves, including SDR's 523.37 billion ringgit. Malaysian government papers 13.42 billion ringgit, deposits with financial institutions 905.07 million ringgit, loans and advances 28.28 billion ringgit, lands, buildings and other fixed assets 4.57 billion ringgit, and other assets 40.02 billion ringgit. It added total capital and liabilities amounted to 610.57 billion ringgit, comprising paid-up capital 100 billion ringgit, reserves 204.29 billion ringgit, currency in circulation 175 billion ringgit, deposits by financial institutions 110.97 billion ringgit, federal government deposits 13.84 billion ringgit, other deposits 65.55 billion ringgit, Bank Negara papers 9.34 billion ringgit, allocations for SDR 27.88 billion ringgit, and other liabilities 3.61 billion ringgit. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. Sita Global Berhad's wholly owned subsidiary, Sita Global Land Sdn Berhad, has accepted 2 construction contracts from UDA Land South Sdn Berhad and the Public Works Department JKR, totaling 82.72 million ringgit. In a filing with Bursa Malaysia, it said the contract from UDA Land worth about 62.42 million ringgit is for the main infrastructure works comprising earthworks, roadworks, electrical infrastructure, main sewerage systems, main water reticulation system and other associated works in UDA Enclave Zone B, Bandar UDA Utama in Johor Bahru. It said the contract from JKR, valued at about 20.30 million ringgit, involves the Labuan Jetty upgrading project and will be completed within 120 weeks from the date of possessions from the site, with target completion in April 2028. Sita Global said that the contracts will further increase the order book of the company and its subsidiaries to approximately 1.8 billion ringgit based on the group's outstanding order book of 1.1 billion ringgit as of September 2025. It added the contracts will not have any effect on the issued share capital and the shareholdings of the substantial shareholders of the company, but are expected to contribute positively to the earnings per share and net assets of the group during the durations of the contracts. In a separate statement, Sita Global Executive Chairman and President Tan Sri Muhammad Norza Zakaria said these projects reflect the trust placed in the company to deliver infrastructure that matters to communities and support economic activity. He added that across transport, water, urban development and renewable energy, our priority remains on delivering work responsibility and consistently while building a resilient and diversified infrastructure platform for the long term. Up next, we have some business news update. Malaysia Aviation Group MAG yesterday announced that the transition of Maswing's operations to Air Borneo effective January 1st. Air Borneo will take full legal and operational responsibility for all services managed by Maswings. During the initial transition period, Maswing's branding may remain visible as Air Borneo gradually introduces its new corporate identity. The transition follows the completion of the ownership transfers under the sale and purchase agreement signed with the Sarawak government on February 12th. In a statement, it said MAG remains committed to supporting a smooth and seamless transition and acknowledges Maswing's contribution to strengthening regional and rural air connectivity over nearly 2 decades. Maswing establishes on October 1st, 2007, serves Sabah, Sarawak and Labuan. Now, starting with 4 Fokker 50 and 4 Twin Otter planes across 22 destinations, the airline upgraded its fleet to ATR 72-500 aircraft from 2009 to improve efficiency, reliability and passenger experience. Maswings has operated over 430,000 flights, carried more than 19 million passengers and supported over 300 jobs across the aviation value chain. It has been instrumental in providing rural air services, linking remote communities with urban centres, healthcare, education, government services, commerce and tourism. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Crest Builders Unit CB Tech has secured a 73.9 million ringgit subcontract for electrical and ELV works at a mixed-use development in Jalan P. Ramlee, bolstering earnings visibility from 2026 onwards. EMCC has secured approval from the Housing and Local Government Ministry (KPKT) for 4 new pawnbroking licenses, expanding its network to support earnings growth. Gateshead Holdings subsidiary signed a 15-year PPA with Genesis Energy for a 94.6 megawatt New Zealand wind farm, with commercial operations targeted in 2H 2028. Matamit has secured a 6-year contract from Perusahaan Automobil Kedua Sdn Berhad, also known as Pro2, to supply electronic parts for a new vehicle model, with the project expected to generate about 176 million ringgit in revenue. Southern Score launched an unconditional mandatory takeover offer for Nova Pharma Solutions after acquiring a 33.001% stake at 37 cents per share, with completion targeted in the first quarter of 2026. Now that's a wrap for Midday Roundup with me, Anujaria, on Kleverstock. Thank you for choosing us investors. Stay tuned for the next live coming soon.